Hi everyone, I want to give you an update on the S&P 500. So you see this nice little green support line that I've drawn there. Well, that's broken. It's gone below. So we now seem to be in more of a downward channel, which you could say, well, but you could have said that up here. Oh, not really. I hadn't really developed. Could have said it up here, could have said it up here, could have said it up here. Yeah, I might have been able to say it earlier, but anyway, I'm saying it now. And that means there's one of two real options we're looking at. I don't think we're looking at any kind of V-shaped recovery. You might get some rises within this channel, but if you were to print this out and keep it on your table, then it'll probably stop you from getting over optimistic. Let's say this week the market suddenly rebounds and does this, which is an 8% rise. You might say, oh my God, look, the market's, or even this, 6% rise. Oh, it's going up, everything's turned around and it's hunky-dory. No, I think we're just going to be moving in a downward would be moving upwards in a downward channel. That's all that would be happening. So what are the options that are left to us? So let's look a year ahead, and this is roughly a year ahead. Option one, we're down just 5.64%, which might entail us going lower, up, down within that. Option two, we're down 22%. Okay, why do I say that? Well, one of the reasons for me saying any or all of that is basically this. Look what's happening here. That monthly MACD seems to be falling quite sharply, which can pressure all the other momentum indicators into staying lower. And that doesn't mean it's a no-brainer to just sell and go short, but that's the context under which we're working right now. Okay, so we're going to still look at whether it should be cash or specific stocks and what those specific stocks are. And I'll continue doing those updates and keep you abreast of things. And after all, don't forget, something could happen. There could be some massive economic policy change, or the markets, as they did here when everyone thought that that's it, we've had it. We had this massive capitulation and then suddenly this huge V-shaped rally. And we're nowhere near getting back to those levels and that we were back then. So we're still in the money a lot because we're still up from where we were and what things looked like a year ago, 2 years ago. But we need to know the context against which things are moving. We're now back to basically January 21 levels. So the levels of what we were, 18 months ago. So we do need to understand, well, when the market's going up, why is it doing that? What's happening? Well, what's happening is it could be going up in a downward channel. And if it's falling, then we need to know, actually, don't worry, it should stay within this channel. Now, if it goes below this lower band, then I'll say it, all bets are off, and we've got to then reevaluate whether the falls are even sharper and more significant. Okay, so that's how we do it. None of this is guaranteed. None of this is a science. This is my best estimates. Okay, thank you.